in all parts of the market, we're seeing a flight to quality. So buildings like Park Tower, which was built as a luxury condominium, continues to sell quickly for excellent prices. The buildings in the Gold Coast, if we're talking about condos, that are challenged are more of the middle tier buildings, the buildings that I might have built in the 50s or 60s or 70s, because buyers, want higher ceilings, they want balconies, they want gas cooking, they want to own their parking space. They really want the amenities that were offered with the newer construction. If you think of the condo market as three segments, there's vintage apartments, like the pre-war apartments, which are tend to be grand, well-proportioned floor plans, prestigious buildings, very well located, but they might not have parking on site. The maintenance fees might be a little higher. That part of the market's actually slowed a bit, except for buildings like 209 East Lakeshore, which continue to have the cachet to the buyers care about and want to go in. The middle tier, the buildings that were kind of built when architectural standards fell, those are tough right now. Particularly when people over improve or they combine a bunch of units, so they might have $1 million apartment in a building where everything else is trading at $200,000 or $300,000, and there's a few of those, and there's some good opportunities for buyers, but do you want to be the biggest house on the block, so to speak? And then when you look at the luxury buildings, if you look at some other LR projects like 840 Lakeshore, 270 Pearson, 250 Pearson, there's good demand in those buildings, even in some of the buildings that are not quite as well done, but still excellent options, 55 Erie, the Pinnacle, the Fordham. I mean, those units are selling. They're selling at a discount over what they would have in 2006 at the peak of the market, but the demand is there because the amenities are there. I haven't been in the Elysian, but I've heard that, because now you can actually go in the building and they are delivering units, that it's quite elegant. I think there's a lot of buzz about that now that it's something you can, look at, touch, feel.
Has anybody asked you about that lately, or is that something you'll expect more after you get inside?
I have had a couple people more recently talk about it. There was sort of the initial buzz when it was first marketed, and now I think then there was a lull, and now as it's becoming more real, people are starting to talk about it. And then, of course, when they start closing on units, we'll start to see a secondary market, and it'll be very interesting, as with Trump, to see how that shakes out. Walton on the Park is a little bit further behind. I know that they have been selling units, but that it's slowed down, as everything slowed down, in the last year. I don't know what their more recent activity is in this fall market. I think that buyers get a little overwhelmed down in that part of Streeterville because there's so many choices and it's a little congested. I don't tend to sell as much over there just because you're sort of wherever you are, you're kind of looking at the next building over, and there are still some lots, and people are a little anxious about what might go up here or there. Obviously nothing in the near term, but 600 Fairbanks, there's been some resales. There are people who the developer still has some units, and that's a problem. I did talk to one couple that would like to resell their unit, but they really don't want to go head to head with the developer. It's a larger unit. So, I mean, that's the other challenge with buying new construction, is that if the developer has a unit and you do, in most cases the developer's going to win. Ironically, not in Trump right now.